Hello and a warm welcome. You're watching Business at 9 with me, Jude Sanat, and my colleague Shibani Garat joining us from our studios in Mumbai. Let's start by taking a look at how the US markets are faring this Wednesday evening. The S&P 500 climbed about 0.2%, while the Nasdaq composite added about 0.5%. The Dow Industrial Average gained around 0.1%. Stocks rose, remember, on the back of a tame US inflation report. Now, tech stocks too witnessed a surge even as AI company CoreWeave shares jumped about 18% after its second quarter revenue doubled. Microcomputer added a 13% spike following a strong earnings and revenue forecast for the very first quarter.
Right, now let's move over to tracking the U.S. core inflation. Now, U.S. core inflation, in fact, Jude, rose 0.2% month on month in July, in line with the estimates, while annual core inflation stood at 2.5%. Headline CPI rose 3.4% year-on-year. The softer inflation reading eases pressure on Fed to raise the rates as impact of the Iran war-related energy shock continues to fade. The data gives the Fed more room to weigh inflation against a recent slowdown in hiring ahead of its September meeting.
In fact, the July CPI trend data sees February at about 3.1% forecast versus the actual 3.21%. March, of course, sees a 3.48% as opposed to a 3.4% actual, even as April sees a 3.8% versus a 3.48%. In fact, for more on this, we spoke to Gautam Singhania on her CPI outlook. Let's listen into what Gaura had to say.
A lot of the quarterly trajectory is because of base effect. And yes, inflation is tracking above target in FY27. For us, our official forecast is 4.9%, similar to the RBI at 5%. But we do see limited downside risk to the estimate because we don't see any further increases in fuel inflation. Majority of the shock has got absorbed by the government and the OMCs in case of fuel prices. For food, as I mentioned earlier, as you also mentioned, that the rainfall activity has improved, though yes, it is uneven. A large share of the country is still receiving deficient rainfall. So we do expect some continued pickup in food inflation, plus adverse base effects, which push it above 5.5% in the second half of FY27. But again, this whole inflation story should be seen in conjunction that last year, we had an inflation of 2% for the year, FY26. On FY26, on a 2% inflation in FY27, even if you have a 5% inflation, it's not that negative because some part of this 5% is due to the base effect.
Now, it's the end of an era at Tata Sons as N. Chandrasekaran writes he will not seek reappointment as chairman, bringing 6 months of uncertainty over his extension to an end. N. Chandra has spent 40 years with the Tata Group and has led Tata Sons since 2017. His exit comes as the group executes major projects across semiconductor, electronic, aviation, automobiles. Now, Tata stocks have reacted negatively with TCS, Tata Motors, PV, Tata Consumer and Tata Steel all closing lower. The immediate focus now shifts to succession at Tata Sons with major strategic projects at critical stages. The big questions are who succeeds N. Chandrasekaran and why his extension failed to secure unanimous board support despite backing from, in fact, the Tata Trusts.
In fact, Union Commerce Minister Piyush Goyal was asked about the leadership change in Tata Sons, and the minister responded by saying that the government will in fact respond to it in due course. Listen in.
Government looking at the leadership transition in the Tata Group. There are a lot of investments at stake in it.
We have been busy in Parliament. We will respond to that officially in due course.
Now, moving on, India and South Africa-led SACU group has, in fact, in terms of reference, to start negotiations for preferential trade agreement. Union Minister Piyush Goyal has said that 5 economics under SACU bloc comprise of about $500 billion in economic value, and India is the second largest supplier to SACU bloc. Listen into what Commerce Minister Goyal had to say.
इसी श्रृंखला में आज साकू देशों के साथ प्रेफरेंशियल ट्रेड एग्रीमेंट यानी ऐसे वस्तु देखेंगे जहां पे दोनों देश साकू के 5 देश और भारत दोनों के लिए फायदा होगा, किसी प्रकार का हानि नहीं पहुंचेगी और उस संवेदनशीलता के साथ ये प्रेफरेंशियल ट्रेड एग्रीमेंट तय होगा। इंडस्ट्री को मैंने अनुरोध किया है कि वो कंसल्टेशंस में विचार विमर्श में हमारे साथ जुड़े और उनके विचारों को सामने रखते हुए इस एग्रीमेंट को तय किया जाएगा।
Moving on to market regulator action next, SEBI Chairman Tuhin Kanta Pandey has called the closing auction session, or CAS, a microstructure reform for India's securities market. He said India still lags other countries in CAS implementation and that the regulator is seeking wider participation. Let's listen in to what Mr. Pandey had to say.
कि जो कैश है वो एक बहुत बड़ा माइक्रो स्ट्रक्चर रिफॉर्म है और हम लोग एक्चुअली पीछे रहे हैं। बहुत सारे जो ऑल ग्लोबल हमारे काउंटर पार्ट्स हैं वो ऑलरेडी कर चुके हैं। सारे इंडिकेटिव प्राइसेस किस प्राइसेस पे मैक्सिमम बिड्स कवर हो रहे हैं, सिर्फ ये कंसोलिडेट करता है को बिड्स, ताकि एक पर्टिकुलर बहुत ज़्यादा वो, और उसमें भी रैंडम क्लोज है, क्योंकि रैंडम क्लोज का मतलब है कि उसमें भी और संभावना है कि लास्ट मिनट कोई इस तरह के बिड इम्पैक्ट ना करे, इसलिए रैंडम क्लोज भी रखा है। अब पार्टिसिपेशन बढ़ाने की ज़रूरत है, अधिक से अधिक लोग उसको समझें। ब्रोकर्स में बहुत सारे ब्रोकर्स ने इंडिकेटिव प्राइसेस, जैसे आई थिंक मुझे लग रहा है जीरोदा है और या अपस्टॉक्स है, इन्होंने ऑलरेडी अपने वेब में किए हैं, ऐप्स में भी वो करेंगे।
On Tata Motors commercial vehicle reported healthy set of earnings for the first quarter. Revenue for April to June quarter increased by over 23% at over 19,300 crore compared to last year. Meanwhile, profits saw an uptick of over 8% to about 1,530 crore. However, margin have come under pressure due to rising commodity costs.
In more earnings action, Lenskart delivered a strong set of Q1 earnings with performance coming in above market expectations. Profits surged to about 222 crore rupees from 60 crore rupees year-on-year, while revenue grew 43%. EBITDA also jumped about 75.5%, with EBITDA margins improving to around 21.7%, thereby pointing to strong operating performances and profitability.
Now, let's go over to something that has just come in. News just coming in right now that Bank of America has announced it will be acquiring 49.9% stake in Jio Credit, which is Jio Financial's lending arm, for 18,268 crore or about $1.9 billion. My colleague Ashesha is joining us with more details on this. Ashesha, tell us more about this acquisition.
Well, yes. So Jio Financial Services and Bank of America have announced a definitive agreement to form a joint venture that will ensure that Bank of America acquires up to 49.9% stake in Jio Credit. Now, remember, Jio Credit is Jio Financial Services' wholly owned non-banking financial company, or NBFC. So that is how the transaction is structured. The investment will amount up to 18,300 crore rupees, or about $1.9 billion US. That's the total value of the transaction. Now, under this transaction, Bank of America will initially acquire about 26.5% equity interest in Jio Credit. This will be via preferential allotment of equity shares, and its stake from 26.5% initially will rise to about 49.9% through the exercise of warrants. So initially, it is via preferential allotment of equity shares, and the stake will rise further via issuance of warrants. So that's the news that has now come in. Now, Jio Financial Services has also clarified clarified that, of course, this is subject to regulatory approvals. It is likely to take some more time. But for now, this is how the transaction is structured, where Jio Financial Services and Bank of America will enter into a joint venture agreement, and Bank of America will acquire up to 49.9% stake in Jio Credit.
Thanks, Ashisha, for bringing us that all-important update. Bank of America as well as Jio Financial Services ending up in that joint agreement where BOFA will in fact acquire 49.9% of stake in Jio Financial Services. But moving on, as global tariff threads tangle and India diversifies markets other than traditional markets, Raymond Chairman and MD Gautam Singhania is going big on Europe as his next export frontier. In an exclusive conversation with ET Now, Singhania said that while exports to the US may dwindle, new markets are opening up thanks to the free trade agreements. In fact, in this freewheeling conversation, he also talks about other business areas and why he is particularly bullish on defense and realty. Let's listen into an excerpt of that conversation.
Each one has got its own challenges and its growth opportunities. Village lifestyle is more fabric-led, high-margin business. Apparel is the growth engine. New verticals is the growth engine. You take real estate, we had our old legacy land, which was where we started in 2019. Today we have over 8 or 9 JDAs that we have done. And Mumbai as a city is going to get developed, so we're going to grow in that.
Right.
You take engineering, there's the aerospace space where a lot of companies are looking to move their production to India. Defense is a very big opportunity. Auto components is a very big opportunity. So like I said, each one has got its own growth trajectory, and we're very optimistic on all.
Are there any new brands you're looking to add to lifestyle?
Well, currently, no. We've got 4 brands, Raymond, Park Avenue, Parks, and Color Plus. I think that's pretty much a handful, and I think we want to consolidate between that.
Yeah. Staying on with lifestyle, exports is a big theme, and exports is, again, a big theme for Indian companies because of, the headwinds, first of all, the tariff problem, that started last year, and now the West Asia crisis. In terms of India has seen the US as a traditional customer, as a market. In terms of the headwinds that the tariff has generated, are you looking to diversify more? Are you looking at, say, Latin America, Europe?
So let's see. Let's say I think the tariffs that ever happened were probably the best thing that ever happened. Most people look at it as a negative. Why do I say it's the best thing that ever happened? Right. Because India post-HAP went and then did a lot of FTAs with the EU countries. And if I'm not mistaken, India did 33 new FTAs, which is hugely beneficial to India. Number 2, like the UK FTA is signed, EU FTA will be signed next year. This opens up a very large market for us, which was not there earlier. So whilst everybody looks at just the US, now you have the EU as a very, very big market. The UK FTA signing, which is now in force, will further enhance the UK market for us. So I think exports to countries like America for companies like ours will become less. On the flip side, I think America will also, again, Trump is talking about 100% tariff. Companies have to realize that we cannot deal with this kind of volatility, so we are going to find other markets where we have a little better stability.
Raymond has also made an entry into the South Mumbai real estate market, and recently you have a joint development agreement for developing a property in Parel. Now, I mean, you had traditional land parcels in Thane. Now you're moving, more towards Mumbai. What is your plan going to be? How are you looking to expand across the city?
So like in Thane, we had the land parcel, which was the original 100 acres, which we started developing. And we're now in multiple phases of that. I would say 4-5 million square feet is now under development. Having built up the skill set and the capabilities to do real estate, we decided on an asset-light model. So we started to come into South Bombay. We started with our first project in Bandra West, which was Nirmal Nagar. And subsequently, I think we've signed about 9 joint development agreements so far.
Now your defense business has a new CEO. Okay, and this is a business which is growing in its profile in India, given the fact that security is such an important imperative for the country. But it's a fledgling business for you. How are you looking to grow defense? What are the kind of investments you're looking to put in defense?
So currently, like you know, Mr. Bhanu Srivastava has joined us as head of defense, and we see a huge opportunity. You know, there are tens and tens of wars that are going on in the world, and I think defense is always going to be required. I mean, you hear of the Iran war, you hear of the Ukraine-Russia conflict. These are the bigger ones, but there are like 100 wars going around the world, and the way wars are going to be fought is very different today. I mean, it's not going to be tanks and soldiers, it's going to be drones and technology and unmanned aircrafts, etc., etc. So we're in the process of finalizing a strategy of how we are going to get into the defense space. There are a lot of opportunities that we see, and when we're ready with it, we'll come back to you on that.
Right. Coming to the West Asia conflict, now the war that's upended the global supply chains. Exporters globally have had a lot of problems to face, and so also Indian companies. Given the fact that you're in textiles, you are a garment maker, how has Raymond coped with this crisis so far? And going ahead, what is your outlook about the headwinds from
it is
this
what
issue?
it is. You can't do much about it. But as a group, as you know, obviously you can appreciate, as real estate is becoming a larger part of the group for us, a percentage of exporters of total group is coming down. Of course, the crisis in Iran and the Strait of Hormuz, etc., is creating massive disruption in supply chain, in pricing, in cost. In real estate, your costs are going up. So it is what it is. You just have to cope with it. But I always say, whenever there's a crisis, I genuinely believe that stronger players become even more stronger and the weaker ones fall by the wayside. So always look for the silver lining in the crisis, and this is one of them.
Sure. Again, coming to engineering, okay, and aerospace, you have grown inorganically. I mean, when you bought the business, maybe about 2 years back, 2 or 3 years back. Are you looking at like growing the business through further acquisitions? Or
it's going to be a mixed strategy.
Yeah.
It's going to, acquisitions are there, dime a dozen. We will look at the ones that actually fit our bill and are good for the business that we can scale up. And if it fits our bill, certainly we will look at it.
Right. India is also emerging as a global manufacturing hub. And one of the aspects of that is that a lot of businesses, a lot of brands, especially in the textile industry, they're going to be coming to India. It's already happening with smartphones, electronics. You see that as an opportunity, and are you taking China Plus One seriously?
See, China Plus One is a great strategy for manufacturing. If you're sitting in a boardroom in the US and you look to the east, you don't want to put all your eggs in one basket in China, and specifically with the way the Trump issues and the volatility are there.
Sure.
You want more than one supplier because you can't have your supply chain drying up one day if Trump says something. As far as brands coming to India, that's fine. Raymond is entrenched in 700 cities. We have distribution, first mover advantage. We welcome
Are you looking
them.
at partnerships?
No, we have not taken a partnership with any brand, but it's really when foreign brands come. The problem is that if they sell a good for £100 in the UK market, they have to sell it for about 113,000 rupees here at the exchange rate. They can do it at 10, but when they sell it at 10, my product is at 2, the equivalent product. So it actually makes me shine better. It gives me pricing power.
Right, on that note, it is time for us to slip into a very short break. You don't go anywhere. We'll be right back on Business at 9.
Welcome back. You're watching Business at 9 with myself, Jude, and Shibani in our Mumbai studios. Moving on to some action from the NSE next. My colleague Akansha spoke to Kamlesh Shroff, National President at the Association of NSE Members of India, who spoke to her about SEBI's proposals on the participation of FPIs in commodity derivatives and so much more. Let's listen into a slice of that conversation.
I think it's a right step in the right direction, and I think what lacks the market as far as commodities is concerned is the liquidity factor, and FPI also being part of it will make that substantial difference. So it will not be only a retail participation plus a FPI participation, is a good step in the right direction to start with.
Okay. Now the proposal also requires foreign investors to close the position at least 3 days prior to the contract expiry. So how practical is this requirement from a global investor's perspective?
I think it's a good norm because delivery will have its own downsides. So a 3-day before period is a sufficient period for delivery marking, and if it's a deliverable thing, then it can go through the broker's TM CM account through. So that is a good, but I don't see that the delivery volumes may be that large enough. So what will happen is that most people will actually look for cash settled contracts, but this option for taking delivery is a good option, and a 3 days period is reasonably, 3 or 5 days period is a good period for marking the same.
Now, talking about the latest news that we heard in this morning, the resignation from the Tata Sons chairman, N. Chandrasekaran. So, what is your outlook? I mean, just your reaction on that, and what should investors should watch out for next in coming months, and what is how is it going to impact the overall group as well?
So, of course, he's been an old hand as far as TCS and the other Tata companies are concerned. So as we've seen in market also, I think there's a reasonable reaction on the TCS market stocks. But these I have noticed over span of time, they will also come back because Tata as a conglomerate is a large group. And what we should look at, as you rightly said, is the succession and the planning. So I'm sure now that the date of 20th of February 2027 is the date, and before that the succession needs to be planned. I am sure that will come through. So it's a matter of little bit of uncertainty, but the certainty that post February of 27, a new successor will take on.
Right now, Maharashtra FDA has suspended licenses of 4 Domino's pizza outlets. 3 of them are from Mumbai, as they flagged multiple safety and hygiene lapses in Domino's. My colleague Akanksha joins us with the details on this. Akanksha, so now on, we'll have to be careful before ordering pizza from Domino's.
That's right. Maharashtra FDA has stepped up food safety inspections across major restaurant chains in the state under its Safe Food, Safe Maharashtra campaign. The campaign covered major brands including Domino's Pizza, KFC, Pizza Hut, McDonald's, Subway, Burger King, Starbucks and Monjini's as well. In fact, 104 chain restaurant establishments were inspected across Maharashtra and several food safety and hygiene lapses were flagged. Now, Domino's Pizza outlets have faced major FDA action. The licenses of 4 Domino's outlets in Maharashtra have been suspended with immediate effect. The FDA also flagged several issues at these outlets, including improper food storage, temperature control, pest control and sanitation. The regulator also found lapses related to segregation and overall hygiene practices. Meanwhile, Pizza Hut outlet in Akola was also faced FDA action. The regulator seized 55 kgs of frozen paneer, which was suspected to be substandard. So overall, during this campaign, the FDA issued 95 improvement notices to food establishments. So clearly, the Maharashtra FDA is stepping up checks across major restaurant chains with a focus on food safety, hygiene and compliance.
Thank you so much for joining us and giving us these details. With that, it's a wrap on this edition of Business at 9. Goodbye from me, Shibani Gharat, my colleague Jude Sanit and the entire team of ET Now.